So what we want to cover today is, we'll just talk a little bit about us. I think most of you are familiar with us, but Chris Smith and myself will be presenting. I'll be covering some of the more commercial aspects of protecting your business, and Chris will cover off on the government announcements, both state and federal, and how that impacts. So yeah, look, we'll just go through what we believe is the game plan to protect your business. So we'll talk about some strategies around sales, profit and cash flow. As I said, Chris will cover the government measures. Look, there is a chat section. If you can send your questions through, we'll deal with questions at the end. So thank you, everyone. Yeah, so look, I think there's no doubt there's been a new, we are in some sort of storm, trying to navigate that, what does the new normal look like? There's been a lot of change and a lot of challenges for a lot of businesses. And, I think, we also need to be, a number of our clients are doing okay, but there's obviously a number of businesses that are really hurting badly out there, particularly if they're in the, entertainment, hospitality space. And so it's just, I think it's really important, whilst, in lots of ways we need to be grateful, but just also, acknowledging how difficult it is for some people and certain circumstances that people are dealing with. But I think the important thing is, how do we find the new normal? We're going through this sort of massive change process at the moment, and what's important is that we find what that new normal's like. So what I might, this is a platform or a process that we work through. Some of our clients are familiar with it, but I just want to talk about the what I've highlighted in yellow. And I guess if you look at the 4 pillars, what we'll cover today is, protecting your business, what we believe and our experience of dealing with, clients that are on the webinar today, but, other clients there's these 4 pillars. And I guess the first one is commitment. And that's about protecting your energy. I think, it's one of the big challenges today. Is how do we protect our energy? How do we still stay committed to our business? Because it's pretty easy to become disheartened. The second is, financial control, and that's about, profitability and cash flow, which we'll talk about today. The third is having a plan. And lastly, you can have all those things in place, but if you're not executing, then, it really doesn't count for much. So what are we doing to make sure we do execute? So we'll be covering those 4 pillars today and a couple of those key boxes without going through that in detail. So let's talk about commitment. Let everyone read that quote. I think it's we're very fortunate. We're in a really privileged space. We work with leaders. We work with entrepreneurs. They're always adjusting their sales. So for us, it's we're very privileged. But you do look out there and you think maybe some businesses have let down those sales, and they aren't adjusting those sales. So I really commend and congratulate everyone for their energy to just keep going. And I guess when we look at how do we protect ourselves, I always use the analogy, and maybe it's not a great analogy, but the oxygen mask. I'm not sure when we'll next be using oxygen masks when we're on the plane, but anyway, the first thing is we need to put the oxygen mask on us. And we need to protect our energy, because if we're going to be there for family and friends and our business, we need to be in in the best mental space that we can be. And for me, there's 4 elements of protecting energy. And I think if I look at my experiences of working with clients and many business owners over the years, the thing that concerns me most is when business owners lose their energy for their business and their passion for their business. And so it's really important, even in these sort of turbulent, challenging times, that we maintain our energy. And if I look at having read quite a bit on this recently, there's 4 elements to that energy. One is how do we keep our physical self, physical state good. And I think that comes to things like keeping, exercising, getting out there, getting fresh air. The second thing is the emotional state, how we deal with that. We need to make sure we keep our connections with, but not only our staff, but our friends and our families, in this time, and, with the, wonderful opportunities we have with technology like today, provided you can get it working, it works really well. And then the third thing is how do we protect our mental energy? There's a lot of, obviously, and rightly so, there's a lot of concern out there, but there's a lot of scaremongering as well. And it's important that we go to the right sources to get our information to make our decisions and not get caught up in social media and not get caught up in some of the new, 24-hour news cycle. And I think most importantly, is we need to keep on track with our purpose. I know for me personally, this has been a little bit of a challenge. Some days I wake up and I just don't feel that great. So it's really important that we keep focused on our purpose. And I know for me, it's how can I help people, and that's not my mind, then a lot of the other stuff goes away. So we talked about commitment. Let's talk about control. So control, and I'm just keeping an eye on time here. So if I do look down, I'm just checking my time. So I hope you understand that. Look, it's pretty simple, really. It's, where are we now? Where do we need to be? And how are we going to get there? So a pretty simple framework, and a framework that we use a lot when working in our business and with our clients. I think it's also important to understand the levers to get the best outcomes. What are the levers that drive sales? What are the levers that drive profit? And what are the levers that drive cash flow? So we need to understand that. I think the other thing that's really important is we need to look in our business, particularly at the moment, what's draining cash and what's providing cash. Maybe there's a saying, when the tide goes out, the rocks get exposed. So maybe those rocks are being exposed at the moment, with our businesses. And what we're finding is that maybe some parts of our business aren't that profitable and not necessarily generating cash flow, and other parts are more profitable and generating cash flow. So I think, and having, a number of clients I can see here where we've done this sort of exercise and worked segmentation and just looked at different things. But I think today it's probably more important than ever to look at the different segments of our business, and those segments can be split by customer, they can be split by product, they can be split by geography. And we need to understand which segments in our business are profitable and which segments are unprofitable, and which segments are drawing on cash and which segments are generating on cash. There might be some particular customers that we decide in the current environment are just no longer profitable, and that we need to find a different service delivery. And it doesn't mean we need to get rid of those customers. It just means that we either need to restructure the way we deliver that so that those customers are profitable. And I think in the current environment, that's a good reason to restructure some of our service offering, particularly with some of those unprofitable customers. But I guess the ultimate one is that we decide to exit, or we put it on ice. We put it on hold, and we just put on hold that part of our business and revisit it when we get back to a more acceptable normal. I think the other thing too is we need to use the past to forecast the future. We need to forecast out. I know one of the pivots that we've made, and I see a couple of clients are on today, and we're doing that pivot with them. But previously it was okay to look quarterly. I think in the current environment, it's important, in some cases to look weekly, and in other cases to look monthly. Some businesses are okay, and maybe they don't need to have that sort of intense scrutiny of their forecast. But for other businesses, even though they're profitable, and I'll go through an example of that in a moment, where they are profitable, but the cash flow can change very dramatically on those businesses. So we just need to understand what's going on. So I think what's really important is that all businesses at a minimum should be looking monthly. So when we forecast, what are the things we need to think about? We talked about 3 months. We should look at different scenarios. What's our best case, our worst case, and what's the most expected outcome? It's important that we look at our pipeline by customer or category of customer if appropriate. And we need to look at what the impact of that is on our both price and volume. In some cases it might be price and volume. In other cases it might be price or volume. I think what's also important is to understand the impact on our fixed and variable costs, because some of our costs are obviously going to come down as revenue comes down, but obviously our fixed costs are not. And they're the ones that we just need to be very mindful of as the scale of our business changes. From a profit perspective, we need to look at expenditure by supplier. We just need to look at what is non-essential at the moment. What we need to either negotiate or reduce where appropriate. We need to review excess labour requirements, and I'll talk more about that labour. How much labour do we actually need to deliver on that revenue? We need to make some decisions about that excess labour. Chris is going to talk more about some of the government subsidies that are available from profit. Then lastly, we need to look at, in our forecast, what the impact on cash flow. Very important to look at working capital, and we'll talk about that in a moment and just look at an example of that. We need to check what available finance and financial assistance and government assistance is available, and both Chris and myself will talk about that a little bit later. And lastly, I think, what's important is to maximise our capacity to access funds at this time. There's some uncertainty as to how this will all pan out. Hopefully we don't get a shutdown sort of scenario, and it's probably looking less likely that that's going to happen. But, what does it look like? What does a new normal look like? And I think lastly is it's important that we don't confuse cash flow with profit. The thing is that there's going to be access to funds out there for a lot of businesses, but if they're unprofitable and losing money, at some stage, they're going to have to pay that money back, even though they can access funds today and survive either through their bank or the tax office. So it's still important that businesses focus on profit. Otherwise, you're really just kicking the can down the road, I think, just to quote, what's happening out there. What we need to do, ultimately, that loss will need to be paid back. And so it is important to sort of look at that. All right, so if you think about it, we've got to protect our energy. We've got to have control of our business. We've got to be doing those forecasts. We've got to be looking out 3 months. We've got to be looking at scenario analysis. We've got to look at the impact of debtors, the impact on revenue. We need to understand our fixed and variable costs. What are some of the strategies we can employ? I think this is a great opportunity. Winston Churchill quoted, never waste a good crisis. Great opportunity to really look at our business models. And it's really interesting having some conversations with clients, how they're going, wow, look at how we're doing things differently now in this current environment as we transfer to a more online model. Look at how we're engaging differently, how we're having meetings differently. Look at how our team working. So all these great opportunities we can do in this current environment. So what I want to talk about is 3 elements. What can we do around sales? What can we do around profit? And what can we do around cash flow? And I'm just going to cover some key points here. I'm not going to go through everything. I'm just, in the interests of time. So as I mentioned earlier, we're going to have some, there's some dry creek beds out there. And there's going to be flowing rivers. I mean, there's some businesses out there that are doing really well, and there's other businesses that are really struggling. So, how do we take advantage of those flowing rivers? So this is a model that I use quite a lot with, with working with clients is, we've got existing customers that we sell existing products to. We've got new customers or new market segments that we can sell existing products to. And then the other pivot is that we can start selling new products and services to existing customers. And then the last one is we can embark on something completely new. We might want to get into some, take advantage of some opportunity where we're selling new products to new segments. But, that's a much higher risk strategy. So let's look at some of the low risk strategies. The first thing is, the low hanging fruit is we've got our existing customers that we sell existing products to. I think one of the most important things we've got to do is re-engage with our customers. Look at our relationships. Look at our CRM systems. Are we making contact with their customers? Are we asking them what their challenges are? Are we looking at how we can help them solve their problems? I think, some really valuable conversations can come out of this sort of environment if we embrace what we do with our existing customers and our existing products and services. The second thing is where are there, new market segments? There's still essential services out there, agriculture, mining, how can we pivot as maybe a service provider to those industries? And the other thing too is there's some scarcity out there. There was scarcity of toilet paper for a short period of time, whether you could start manufacturing toilet paper. But, it's interesting to see some businesses pivoting to hand sanitizers, face masks. Maybe there's labor shortages in certain areas where we can pivot and look at scarcity. And then lastly is, how can we pivot in terms of our existing, our products and services? Maybe there's pivots around, home delivery, and we see some restaurants doing it very successfully, or home online delivery, or maybe there's opportunities, with all these parents homeschooling, maybe there's an opportunity that's provided there for all these sort of frustrated parents. I think it's also to look at different, revisit your marketing channels. We can't stop the activity. If you'd asked me 3 weeks ago, I wouldn't have been talking about webinars. But we need to pivot. What are the channels we now need to go to market to get in front of our customers and our prospective customers? And I think the last thing we need to do is look at how do we reinvent our sales process? It's really interesting. We started doing Zoom meetings with a lot of clients, and now a number of clients are embracing Zoom meetings with their customers. So what's the virtual online way that we need to engage with our customers? So we talked about sales and strategies around sales. Let's talk about profit. Look, busy slide. I won't go through everything. There's obviously reviewing, our arrangement with suppliers, where we can negotiate, where maybe putting stuff out to tender. I think, obviously there's, in some businesses, they're doing really well, but there's going to be significant disruptions to their supply chain as they run out of stock. So, how do we overcome that? And we talked about how we can maybe be more innovative in our value chain, how we deliver our product and services to customers. Maybe there's opportunities to reduce cost, take out waste, and increase value. I think foreign currency exposure, is really important, and again, there's some parties there we can refer to, and we include that in our handouts, if people are interested in how they might better manage foreign currency exposure, and I've dealt with our friends at AFEX there. I think the other thing is with salary and wages, what do we need to do? If we've got that excess labour, how are we going to manage it? Because we probably want those good employees, the other side of, as we get back to a more normal, so how do we manage that? And again, that's been pretty well documented, so I'm not going to go into great lengths here. One of the interesting things we're seeing with some clients, split shifts are working really well, and they're actually getting productivity improvements, and that's also a great mitigation strategy, with protecting your workforce. But I think, most importantly, as I say, there's seek advice. Overheads, obviously same deal as with cost of sales, just looking at the non-essential expenditure, probably pretty important, what we can defer, negotiate, reduce. I just see, just recently, and to be honest, I haven't got across it fully yet, but a new code of conduct for rent, but basically there's a proportionate sharing of, any decrease in business gets passed on to the landlord. So I think it's important that you look at those provisions and speak to your agent or the managing agent in that regard. We can see where the banks, a lot of bank fees are being waived at the moment, and the government's announced a credit for Synergy and Horizon. And also revisit your insurance estimates. When those estimates were put in, it probably put on a different scenario. Maybe there's opportunities to reduce your workers' comp premiums. Speak to your broker. And I'll leave that last bit for Chris to go through. Sorry, just checking time. Still on time. So we talked about strategies around sales. We talked around strategies around profit. Let's talk about cash flow. So I call this the cash flow funnel. So we end up with profit. Then we got this thing called working capital. So people often ask, where's my profit? Well, often it ends up in working capital. Then we spend money on capital expenditure. We have debt commitments. We have equity commitments. We've got to pay some tax. And then at the end of that funnel, we end up with a bit of cash. So let's just go through those components of it, and before I hand over to Chris Smith. So if you look at our working capital, typical manufacturer, stocking business, or even production business, stock, or we create WIP. Typically we pay our creditors, 30 to 45 days, but let's say 45 days in this case. Some 75 days later, we might sell our stock. And then another 60 days after that, we might collect our money. So you can see that our cash is tied up for a period of time before we can reinvest that cash back into more stock or more work in progress. So the shorter we can make this cycle, the better. So in the current environment, where are our opportunities to extend creditors? Because if we can push that out, it reduces the period we have to hold the stock, between when we pay for it and when we sell it. Again, how can we turn over our stock faster? How can we reduce that? And lastly, how can we collect our debtors quicker? Let's look at some examples around that. Again, I'm not going to go into great detail here, the slides, but I think what's really important, I think the most important thing in talking to a number of business clients is we need to get active. Often we've delegated the data collection to other people in our business, but sometimes if we've got to get on the phone and collect money, we've got to talk to people. And sometimes that means it's the business owner. So don't be shy just to go, yeah, someone else is looking after that. If you need to get involved, I really encourage you to get involved. Look at things like payment plans. I think the other thing is we just need to get the other side. Some of our clients are going to be distressed. So how do we work together to get to the other side? Because we also want to create a level of goodwill. We don't want to burn off customers necessarily either. So we just need to find that right tension point. You know, and invoice more frequently. You know, if you can do 14-day or 7-day invoices, look for that. Talked about inventory. You know, maybe there's opportunities to get rid of slow-moving stock in the current environment. Maybe there's opportunities to negotiate consignment stock. We talked about creditors. You know, just as you've got to you're probably going to be negotiating with your customers. Your creditors are probably going to negotiate with you. I think, you know, obviously depending on cash flow, prioritise those critical payments. Again, Chris will talk more about it, but there's opportunities to defer the ATO, Office of State Revenue, payroll tax, the utility companies have come out, the insurance companies have come out, all important. But look, one thing I think is really important is you need to prioritise the payment of your super. People often said, look, I'll defer my super. Look, at this stage, you lose that tax deduction. Not that I'm aware of anything that's changed, but look, we'll watch that space. But pay your super. You do not want to lose that tax deduction. You will need that tax deduction. It's probably the most expensive thing you can do to put on deferral. Find other ways to fund your next 3 to 6 months. CAPEX, again, I'm probably not going to go through a great deal here, but look, other than probably if you've got surplus plant, look to divest that surplus plant. I mean, if you've got stuff you don't need, turn it into cash. Now is probably a good opportunity. Obviously, you need to look at the market. Some markets are looking for that plan. Obviously, there's been a lot of stuff out. You know, my experience is that most clients are across that. I'm not going to go through that in great detail. But yeah, obviously looking at where you can defer payment arrangements, I think most clients have been pretty successful, but if you haven't, then that's something important to look at. Obviously renegotiating rates, a number of the banks doing that. Look at your credit card payments. Again, there's options there. You know, maybe look at working capital finance if you previously haven't looked at it. Maybe look at things like debtor finance. Again, happy to make referrals there to people that we believe can help clients or help businesses in that space. Chris will talk more about that, but there's obviously the guarantee scheme where you can get a 6-month holiday, which is backed by the government for up to 50% of the debt. And, you know, there's some third-tier funding sources out there. You know, for some businesses that might struggle to get funding, there are alternative sources. And the last thing is your equity. And before I hand over to Chris, you know, the strategies around equity. I think it's also important to look at your personal situation. You know, look at your personal budget, look at your drawings out of the business, because again, this all puts pressure on the business. You know, I think one of the things is looking at how, and I know that's something where, you know, certainly as part of tax planning and certainly part of the review, is look at how you take your money out of the business. Is it more tax effective, more cash flow effective to take it as dividends, drawings, or salary and wages in the current environment? And we also need to be careful of some of the government announcements too, especially around the anti-avoidance, which Chris will talk about. There's also the access of super, 20,000. And, you know, and similarly, there's an opportunity to defer personal loans, credit cards as well, just as you're doing for your business. So something you might want to look at, but, you know, really encourage you to do your personal budgets and, you know, but also equally, you may need to put some money in. And I think if you put some money in, it's really important. And I know a client of ours, Simon Reed, you know, is here today. And again, we'll put a link, but, you know, look at how you put those funds in, because they should be put in secured with, you know, registered by, with PPSR registration. So really important, not just to put money in unsecured in the current environment. All right, well, I think on that note, I'm going to hand enough from me and I'm going to have a break for 10, 15 minutes and I'm going to just hand over to Chris Smith.
Morning, everyone. So just getting my screen share up. Tony, is that working? Yeah. Okay. So look, I'll be talking to you just on some of the federal and state stimulus measures this morning, and look, primarily focusing around sort of some of the tax-related measures there. I probably just want to intro by saying that these measures are extremely complex and the legislation's been running very quickly. So we're still learning new things every day. The government is being very agile in terms of its decision making and when it releases new announcements. As recently as last night, the Senate passed through the JobKeeper payment, which is one of the items we'll touch on about. So look, I suppose we're going to touch on a lot of those points. Some of them will be very high level. Encourage you to contact myself or Tony or Chris if you do have any other questions on it. But I just wanted to give you a bit of a flavour of some of the things that are out there and probably focus a bit more attention on where the big cash flow amounts are coming from, which we're seeing to be the JobKeeper payment and the cash flow boost payment. And look, I suppose one of the other things as well, just to be aware of, we're hearing examples of schemes and anti-avoidance type structures being formulated. Just exercise lots of caution if you do undertake certain transactions that help you benefit, because I think the ATO is going to be all over the audit activity in the next 12 to 18 months. So look, I'm going to jump straight into it. So the JobKeeper payment, so that's the one that was passed through the Senate last night. Lots of media coverage. It relates to the $1,500 fortnightly payments. I've actually got a few slides on that coming up, and I'll run into the detail of that shortly. And then secondly, the cash flow boost. So this is sort of commonly referred to with that pay-as-you-go withholding credit, and it's the 20,000 to 100,000 that will be made available for small to medium businesses. Again, because there's been a lot of questions coming my way on those two particular measures, I've gone into a bit further detail later on in the presentation. The instant asset write-off. So small businesses for many years now have been able to exercise an accelerated depreciation and utilise a general asset pool. And it's been regularly extended through budget announcements and immediate write-off of $20,000 assets and $30,000 assets. This measure has quite significantly extended this measure, but it's only out to 30 June 2020 at the moment. So instead of businesses only with a turnover of 50 million, it does impact businesses with a turnover all the way up to 500 million. And instead of the assets only being 30,000, it means that you can fully deduct in the year you acquire the asset up to 150,000. So the purpose of this is obviously to stimulate capital acquisition by businesses. There are some complexities around it in terms of installed and ready for use, and some of those will be complicated depending on whether the businesses are able to even be open during the time. So something, if you are looking at a large capital expenditure, it's worth probably just having a look at exactly what you need to do to tick the box off to make sure you get that immediate deduction. There's another stimulus measure announced, which is the accelerated depreciation. So this is when the instant asset write-off does not apply. And this is for, so that would mean if your turnover is more than 500 mil, or if the asset you've acquired is greater than 150,000, or it's after the end of the instant write-off period, so this accelerated depreciation period is due to end 30 June 2021, so it's an extra 12 months. The way this measure works is the first 50% of the cost of that asset you get to deduct upfront, and then the remaining balance of the value of that asset you just depreciate as you normally would. So what that does, it brings forward quite substantially a tax deduction there as well, but obviously it's not as beneficial as the instant asset write-off. But they do cover for different businesses and different time ranges as well. So ATO assistance, and look, Tony did touch on this just before. I thought I'd just mention some of the things that we're seeing in the market as well. So this was similar to with the bushfire relief, that they're offering deferrals of lodgements and deferrals of payments. They're structuring a number of these payment deferrals up with no interest to be charged and no penalties being applied. But you do have to apply for it on a case-by-case basis. You can't just simply lodge a return and decide that you're not going to pay. You do need to contact the ATO, and the ATO does need to be explained how you've been impacted by the COVID-19. Again, we're having a lot of success with Janice. She's a bit of a superstar with the ATO, and she's been getting those across the line. But look, that's something certainly worthwhile having a look into. At the moment, we're seeing 2019 tax returns that would be due payable 31 March are getting extensions out to the 14th of September. And we would expect a similar deferral for our 15th of May lodges, which are coming up shortly. We're seeing deferrals with BAS lodgements and payments, so certainly something to have a think about. One thing I haven't included on the slides, and because I've focused more on the tax side of this presentation, is just regarding the bank and the RBA providing financial assistance. So but certainly be speaking to your banks as well in terms of the credit lines and the deferral of interest payments as well. And then just finally, as the high-level summary with the rent relief measures, Tony touched on that as well. This is really two-pronged. If you're a business owner who's been impacted, have a look at what relief you can get. But we're also seeing a number of owners of commercial properties who now have a substantial uncertainty in how much of their rent is forever gone, because part of the amount is a full-on waiver of rent, and then how much of their rent is a deferred payment over 24 months. So it can have really far-reaching implications for both businesses who rent property as well as owners of commercial property. So please do have a look into that. I wanted to touch on some of the key points for JobKeeper. There's some real complexity in here, so I'm going to run through very quickly the stuff that's sort of commonly in the market, and I just want to touch on a couple of real sort of hot spots at the moment. So legislation passed last night. It's $1,500 per fortnight per employee who's eligible. They're expecting it to last 6 months, and so the payments apply from 30 March, but will first be made in the first week of May. Given that amount, it means that the 6 months they're expecting this to last for, it could be worth $19,500 per employee. So it's a really valuable stimulus measure to be getting your hands on, and that's why we're expecting sort of a lot of investigation in terms of how you access this amount. And I'm going to touch very quickly, but because it's only just been legislated, there's some complexity which we'll have to probably come back to you with a blog article about. One really key point is the amount that the business receives must be transferred in full to the employee once they take out withholding. So in terms of the eligible employers, the turnover, you need to have seen a 30% decrease if your turnover is under $1 billion. We haven't seen exactly the rules on how that 30% applies, but if you're a quarterly BAS payer, they're expecting you to report a quarterly reduction of 30%. And if you're a monthly BAS payer, we're expecting a 30% reduction in the month. You've got to elect to participate, so there's a website link to do so. And you need a self-assessment with the decrease in turnover. And that's where we see there's going to be lots of board activity. We would recommend getting a file note or a proper forecast put in place if you're going to self-assess that to the ATO. Your eligible employees, they must have been hired as of the 1st of March. They've got to be full-time, part-time, or a casual employee for more than a year. An owner can actually apply for this who does not receive a salary, but it can only be one owner. So if there's multiple owners drawing dividends, that's where they're really limited to access any more than one payment. And the employees can only receive it from one employer. In terms of the cash flow boost, now this is the one connected with the pay-as-you-go withholding. So again, I'm going to be really quick here, but if you do have any follow-up questions on this, please do loop back to me. So you grouped aggregate turnover for small business entities of 50 mil, 20 to 100K cash flow boost, and that's made up in 2 tranches. So tranche 1 is 50K up to July, and that's based on your withholding during those the March through to June VASs. And then tranche 2 will be made in equal instalments between July and October. And then in terms of being eligible, you must have payments to staff in the terms of wages, and you needed to have an ABN on the 12th of March. We're seeing a lot of anti-avoidance type measures being put in place, and lots of warnings coming out from the ATO and government industry. So just be very careful about if you do have dormant ABNs and you're still registered for pay-as-you-go withholding. You just need to be very, very careful if you are thinking about changing to declaring salary just to access those amounts. So if there are any questions on that, or your mate at a barbecue told you that you can do something, again, feel free to drop me a line and I'm happy to speak to you further. How you receive, this one's really easy, just lodge your BAS and it's assessed that way. If you're a monthly lodger of your instalment activity, your pay-as-you-go withholding, I should say, the amount will be 300% of that withholding amount up to 50K. And then if you're a quarterly, it'll just be 100% of the March withholding amount. And then top-ups up to that 50K will come in future BASs and instalment activity statements. And then, as I mentioned before, 4 equal portions up to 12.5K each from July to October. Now, in terms of the state government measures, again, I'm focusing more on small businesses here. It's primarily around the payroll tax relief. So they've brought forward the $1 million threshold for payroll tax to 1 July 2020. There's a one-off $17,500 payment, so we're expecting checks and credits to be transferred late July for people who have businesses that have a taxable payroll between 1 million and 4 million. And then a recent update to their announcements is payroll tax has been waived for a 4-month period, 1 March through to 30 June for wages less than 7.5 million. If your taxable wages are under 5 million, you don't need to do anything to access it. If your taxable wages are between 5 and 7.5 million, you will need to contact the Office of State Revenue to get that exemption applied. And then Synergy will be providing a credit for small to medium businesses as well. And a few of the license fees for some businesses have been waived for 4 months just to help with the cash flow there. And look, quite importantly, they've also said no disconnection from water and electricity, which I know is going to help a lot of businesses who have had their turnover completely stopped. Look, before I pass back to Tony, I wanted to get partly the token disclaimer up, but again, just I suppose reiterate around the anti-avoidance measures. We've got government expenditure that we've never ever seen before, and it's legislation that's been put together very quickly. And I would encourage anyone thinking about applying for these measures. And the JobKeeper is an important one because you're self-assessing a 30% reduction in your turnover, 19,500 per employee. In the event that you haven't actually realised a drop in turnover of that amount, it could mean that you're paying that amount back with interest and penalties. So look, just have a real think about accessing it. Seek advice from advisors who are understanding what's happening out there and keeping close to the legislation. And as I mentioned, feel free to contact me if you do have any questions on that. I'm going to pass back to Tony now, and he'll finish up on the presentation.
Thanks, Chris. I'll just back to here. All right, should get my just trying to get my video to start. You can all see me now. All right, thanks, Chris. Look, just a couple of other measures, and just to finish off on the tax, I think the asset protection is really important also in the current environment. There are some new safety nets in terms of solvency tests. So again, familiarise yourselves with those. Your ability to take actions. There's 6-month moratorium. The threshold's been increased in terms of the ability to claim. I think it's from 2,500 to 20,000. Be mindful of your personal guarantees. Look at whether you've got appropriate PPS registrations, because once we come out of this period, there's probably going to be some fallout, I expect, as some businesses struggle to get going. If you need, maybe it's an opportunity to restructure your business at the moment. I know that's something that's on our radar for clients, but, speak to your advisor. Maybe there's an opportunity to structure your business in a more, an environment that achieves asset protection. And look at your directorships. Often we see in a lot of businesses, there's unnecessary directorships in a business, and all parties are being exposed when maybe there's only a need for one of the parties to be exposed. Right. So the last thing I want to finish off, so if you think where we've got to today, we've talked about the energy of the owner. We've talked about having control over our business. Forecasting. We've talked about some various strategies around, sales, around profitability, and around cash flow. Chris has just covered off on some of the government initiatives. And lastly, I just want to talk about execution, which is really important. So I think it's also important, we're really busy. We did a breakfast yesterday with clients, and we talked about busyness and how we can become more effective. So, it is important. Look, it's good that Easter break's coming up. I think it just gives everyone an opportunity to just take some time out, but time out to to stop and reflect and what's going on, and hopefully some ideas out of today's webinar. I think it's also important to get the right cadence and the meeting rhythm in your business. I know for us personally, as directors now, we touch base daily. We've reviewed the way we, just because there's so much changing with clients, with our own business, especially now that we're working remotely. So we now have a daily meeting. We're looking at our weekly meetings, how we connect with our staff. And also obviously your typical monthly and quarterly. I think it's also important, you know, in this environment to make sure you've got the right people in the right seats, and you've also got the right leadership happening, you know, especially around, you know, getting the message out to your team and out to your clients. You know, it was interesting. I was listening to, you know, some of the bigger organizations, and they're just overwhelmed with the amount of messages that are coming from different stakeholders in their business. So, you know, it's really important that you have a clear, concise channel. And, you know, you look at our leadership and our Prime Minister, and I know Chris Mantzoukas has mentioned this a few times, but, you know, I think, you know, the message from the government has been, you know, in the most part, pretty concise and pretty clear. And, you know, we've got this app now, so that they're very, I think it's a credit to the government to look at the way it's communicated its message. So we need to look at how we do that at our business and make sure we've got the right people in the right seats if we're going to execute these things. And I think the last thing is, you know, build that scorecard. You know, what is a scorecard? You know, look, one of the things that we're encouraging clients to do is monitor cash collections daily, weekly, you know, whatever that is. So get those reports, get those updates. You might have your target cash collections for the month. You need to know how they're going. So put in place your KPI scorecards, you know, whatever those scorecards, new sale inquiries, whatever. So let's just summarize. So just to wrap up, yeah, you know, protect your energy. You know, we talked about the forecasts. We talked about opportunities to increase sales and reduce expenses. You know, we've talked about, you know, the importance of managing your working capital. I think particularly your debtor collections in this current environment. We've talked about, you know, managing our finance commitments, you know, the opportunities around there. The banks are very negotiable. The major suppliers are very negotiable. Look at your personal drawings. You know, we often forget about that, but, you know, that's a pretty important part of this equation at the moment, particularly to get our businesses through to the other side. Chris talked about a number of the government concessions, you know, particularly the JobKeeper and the cash flow boost. You know, they're pretty substantial concessions and they can make an enormous difference to a business. So just be, yeah, look at and seek advice on those. And I think the last thing we talked about is, you know, make sure we've got the right people in the right seats, make sure we've got the right meeting cadence, and make sure that we are set up to execute. You know, make sure that we are getting the right information to know that our business is on track on a daily, weekly basis. My last quote, which I use quite often before we were dealing with COVID-19, but I think it's still very relevant today. And, you know, how adaptable are we? You know, we had some great examples yesterday in our breakfast of how businesses have adapted to change and probably going to come out with stronger business models, you know, migrating to online models. You know, I know for us, you know, the ability to use Zoom has been great. You know, if you told us 3 weeks ago, as I said, we'd be doing a webinar, we probably said, you know, what are you talking about? But, you know, we've had to pivot too in the way we work and deliver with clients. And I think, you know, it's just, you know, some people are going to be frozen in the headlights and other people are going to adapt. So I just encourage you to adapt. All right, so we might just now check if there's any questions or comments. Kath, just have a look. Is there anything? Kath's, I'll have to give credit to Kath because she's the reason why we're here. So Kath helps us with our marketing. So thank you, Kath. But is there anything?
If anybody wants to share questions, there is a Q&A button down below where you can type your questions in, and we'll probably have time to cover a couple at least.
I did see a few comments, and, you know, thanks, Dean. And yeah, I think it is interesting to see how businesses are, you know, are pivoting at the moment. Just having a look here. So again, this is all new for us as we look at.
No questions yet, Tony.
All right, that's good.
There's one. We've got
No, look, I can see a question from Dane. Are you getting many questions around sales and marketing strategies from clients?
Yeah, and Dean, I think one of the interesting things now is, you know, especially where we got limited contact, especially around sales. And, you know, look, we had a breakfast with someone yesterday, and they basically had stopped a lot of their sales activity, but then they discovered this thing called Zoom and they thought, this is awesome. And so we got some feedback yesterday. She's basically moved, you know, now engaging with all their customers and getting all their salespeople to start engaging with their customers using Zoom. So I think, you know, so it's how we pivot. I think we need to look at how we adapt our sales process to work in a virtual sort of online world and how we still could engage. I think the other thing too, yeah, look, I think, you know, with marketing channels now, I mean, you know, it's changing. You know, how do we change? And, you know, Dean, you're probably one of the best marketers I know. But yeah, like, how do we look at other channels? You know, marketing is an interesting thing because in some respects, you know, people are probably putting on hold some of their marketing, but maybe, you know, that's probably in some industries and some businesses, it's pretty critical expenditure at the moment. How do we get in front of our customers, whether it's on Facebook or whether it's on, you know, LinkedIn or SEO type strategies, you know, Google AdWords, whatever those strategies are. So I think, you know, it's really important. But I think it's also important just to connect with people. I think that's, you know, if I look at it from our perspective, you know, we've got the online stuff happening, which Kath is pushing. But I think, you know, a big part of our strategy is just connecting with people. And I think, you know, it's pretty old fashioned stuff, but it's just getting on the phone, talking to people. You know, I think if you can have honourable conversations about, you know, what are some of the challenges people, how their business is going, what are some of the challenges they're dealing with, you know, maybe you can connect them with other people, you know, maybe you can help them.
I've just seen that. Oh, sorry, I've just seen a question from Julie there, just about employees wanting JobKeeper but refusing to come back to work. Look, again, with legislation only having passed last night, it's really hard to comment exactly how it will work. I know one of the things I'm negotiating strongly was with the Fair Work Commission and all the other relevant conditions that employers have to work with. I don't know exactly what the rules are, but my understanding is that the payment is there to keep people employed, and so there would be an expectation that if there's work for them to do, that they should be doing it. It will probably apply differently when you've got pubs and places like that. They can't even open, and there's so many sort of glasses you can polish. So I think it's probably a wait and see, but my understanding is it's a payment there to pay your employees, but we'll see how that plays out.
And there's one more question from Janine, Chris, and then we'll close questions just in the interest of time after that, if that's okay.
Yeah, so look, so I'm just reading the question. So JobKeeper payment, is the payment actually $1,500 per person, even if they are part-time and earn less than that normally? So yes, it is, and the full payment needs to be passed on to them. I suppose the thing to get there is they're only entitled to one JobKeeper payment, so they can't have 3 jobs that they're earning $200 a fortnight on and receive 3 payments. And then in terms of the self-assessment for the 30% loss, yeah, look, it's a really great question about if you don't see that reduction, do you have to pay it back? I don't know exactly how that will work. I believe that there'll be a small margin of error applied, but if it's substantially and materially different to a 30% reduction, we would be expecting the ATO to be coming back and seeking those cash payments back. So the forecasting and understanding where you're at and probably putting your hand back up to the ATO if you don't see those losses will be really important. So look, I'm expecting to push a bit more information out on that next week once we do have a bit more info at hand.
All right, thanks, Chris. We'll just wrap up now. Just bear with me. So look, I think, you know, we always finish these sessions, you know, what's the actions you're going to take? You know, we covered a lot of ideas today. You know, I really encourage you to, you know, the worst thing is to, you know, as Richard Branson is, to come across a great idea and not do anything with it. So, you know, if you've got an idea out of today, make sure you note it down, make sure that you take action, make sure you implement it. You know, we'll be doing a recording of this, you know, there will be a recording of this video. So, you know, we'll encourage you to share it with your team or anyone you think it's appropriate that will benefit from it. So look, thank you everyone. Thank you for your time. Have a great day, have a great Easter, and stay safe, and hope your family stays safe. Thank you.